So yes, this is how GBPUSD moved the other week, last week. So when you go to your 1 hour frame right here, can you see how GBP moved? Remember, I want to show you how this moved and what you're expecting next week, right? So now this one, as you can see, how did we enter? How did we enter this buy? Right. So now always these markets, they are very easy. They are very easy to do what? To spot on, right? They are easy to spot on where to enter and where to exit from. But it will always depend. It will always do what? It will always depend, right? So now, for example, now this was the GBP USD, right? So now it was selling. It was selling right here, because when you come here, you can see that it was creating some lower highs and lower lows. As you can see, this is a lower low, this is a lower high, this is a lower low. When it reached here, I want to show you some of the entry techniques that they always use, right? Some of the entry techniques they always use. Okay, so now, for example, now here, when the market reached here, this is the low. Okay, it created this first low here. That low I want to show you, that was the low created, right? Can you see this now? Can you see this? This was, it created this high. Remember, we always trade what we call a shift in market structure. Always trade in market structure, or you can call it a change of character, guys, right? A change of character or shift in market structure, right? So now, for example, here we had this. The market has to be like this. Let me first show you this first, the thing here. So for example, now here it was, for example, it was, if it was selling now for that case GBP USD, it was in the bearish direction. Okay, so now like this, so it reached a time and it breaks. Okay, that's why it makes a market structure shift, or you can call it a change of character. So we always trade this, right? We always trade this shift in market structure or change of character, right? So we always trade this. Okay, when it reaches there, always target something, right? We always enter from somewhere here when we get change of character on any pair we are trading. Okay, so now it is the same thing that we are seeing here. For this one, when it reached right here, this is what it did. This, right? This was a low. This was a low right here. You can see this low. Can you see that low? Right? And it created this. Remember, this was a lower high that it left. Then the market came, it broke that lower high. When it broke that lower high, of course, down here there was an order block down here. You can see there was an order block right here. Came back to that order block, then it bought again. But I want to show you, like, how do we enter when the market comes back to our order block? How do we enter? We always enter from a 5-minute time frame. Okay, we always enter from a 5-minute time frame. Let's go there and we see. Okay, let's go there and we see where we enter from, guys, right? So always, now let's do this. Let's first do this. And this is an entry time frame that we use, right? This is an entry time frame. This is a 5-minute time frame. Okay? So when the market comes here to your 5-minute time frame, it breaks the structure. This is a market structure shift always. we look at on our entry time frame. So when it makes a market structure shift, remember this is an order block we've named. Now we wait for the market to come back to that 1 hour order block, right? Wait for the market to come back to that 1 hour order block on our entry time frame before we execute the trade, right? So when it taps there on your 1 hour order block, right? This is when you execute the trade from here, right? This is where you execute the trade from, right? You put your stop loss right here. They are like 30 pips. Then where is your target? Your target can be somewhere here, almost here. Here it is almost 100 pips. You can target in amount of pips you would like to, right? Here your role is just to wait for the market to go to your TP, right? Your role is to wait for the market to go to your TP. It can take time, but patience in trading is the best, right? So as you can see here, it can take some time, but finally it comes in and reaches your TP, guys, right? So now let's go back to our 1 hour time frame, and we get another zone, right? And we get another zone right there. So that was the zone that helped us to that was the zone that helped us to do what? So that was the zone that helped us to get that buy entry, guys, right? Yes, it helped us to get that buy entry right there. Okay, so now also after that we had another break right here. This was another high that was broken, right? This was another high that was broken right here. So now it has now turned bullish. Okay, it has now turned what? Bullish. That's why we have now some of the fair value gaps here we can look at. That is a fair value gap, and this is an order block right here. Okay, so now we can look at them. Okay, we can look at them. That is an order block and a fair value gap. Then you can now wait for the market to come to either order block or a fair value gap. You can see now when the market comes back to your zone, maybe that is a 1 hour zone, that's when you will go to your 5-minute time frame for entry, right? That's when 5-minute time frame for entry. And how do we enter our 5-minute time frame? How do we enter now? This is the best thing now you have to look at. Okay, so now here you can see on your 5-minute, we always look for market structure shift on our 5-minute time frame, or we call it a change of character, right? Now this one, it was kind of justified. If you look at this, can you see this? Can you see this? This was a high, and you can see that this high was kind of broken. Okay, so now you can risk this, but though we also have some equal highs here, you should not ignore them. There are some equal highs right here. You should not do what? You should not ignore those equal highs, guys, right? But for this, you can risk. This is a risky trade now. You can decide to risk some few pips here. Okay. Remember, we are on our entry time frame. This is our 5-minute time frame, entry time frame, right? Then you can decide to risk, and you target some few pips right there. Then you decide to risk some pips right there, and we. So let's see. Can you see this? Hope you're seeing, guys, right? This was a very nice trade, though, as I told you, most of the times these equal highs act as liquidity. There were some equal highs down here. They acted as liquidity. So of course, they had to come and sweep them. Guys, whenever you see equal highs, okay, equal lows. Sorry, these were equal lows, not equal highs, because this is a bearish trend. Whenever you see equal highs or equal lows, always it acts as liquidity. So now that's we would just wait for these equal lows to be taken out before we enter the market, right? That's why you saw here it was very rapid. It was very rapid after taking out those equal lows. But remember, this is our high, a 1 hour high that we are looking at. This is it, right? So we either wait for the market to come and break that, and we look for another bullish setup, or so let's wait for that one to see how it will move, guys, right? When it breaks it, we go back to our 1 hour time frame and we look for another entry. Okay, yes. So if you own, just keep up with me. So as you can see now, guys, right? So let's go back to our 1 hour time frame. Let's go back to our 1 hour time frame and we see. Remember, this is the zone that we get. This is the zone that we get, the time frame that we always uh, get as the zones we trade from. Okay, so now there was now another break of market structure. Remember, this was the high. Always you have to first look for the break of market structure to either side, right? So now that is the break of market structure. Now let's wait for the retracement. Let's wait for the retracement. But the retracement here, the market just moved high. It hasn't created another retracement again. Okay, let's see here. As you can see now, the market is just bought, right? So let's go to another pair. Let's try another pair. Let's go to USDJPY. Let's go to USDJPY and we see some examples also. Okay, so now this is a USDJPY pair, 1 hour time frame. Let's see this market, right? Let's see how this market moved on our. Okay, let's see this. Let's first remove this replay tool. Okay, so yes, this is it. So it was a bearish trend. As I told you, it shouldn't take you it shouldn't take you a lot of time to know the trend of the market, right? After knowing that yes, it is a bearish trend, what next? Okay, after knowing that it's a bearish trend, what next can you do? Okay, what you have to do next is to look for the zone to trade from. Okay, because now when you look at this was a low. It was breaking lows. That means it was making lower highs and lower lows. That was a low right there. Okay, and also there was a smaller low right here. Break of market structure here. There was a break of market structure there, and there is a break of market structure right here. Okay, so all this was break of market structure, guys. Okay, so now after that, remember, after that, okay, can you see that there was this lower high right here? Can you see this lower high right here, all of you? Can you see that lower high? That lower high was broken. That means it made what we call a change of character or market structure shift. When that lower high is broken, guys, I want you to do this. When that lower high is broken, always we now turn from bearish to bullish. Okay, that means here, what is our next thing? Our next thing is to look for the zones we are trading from. For example, there was this order block. Guys, order block is always formed after a very, like when we're in the bullish trend, after a very big rally to the upside. Now, for example, here there were very bullish momentum here. This was a very bullish momentum. That means they left the zone for these big banks to trade from, and that is the zone that we call order block. They left here. Okay, so now we always wait for the market to come back and tap our zone. Okay, when it taps it, you see when it taps it, you see how it has done. Okay, so now I want to show you, I want to show you how they I want to show you how they entered there when it taps what, it taps your order block, right? When it taps your order block, that's when you go to your lower time frame for entry. That's when you go to your 5-minute time frame for entry when it taps there. So now it have tapped into our 1 hour, zone. Then we have gone to our 5-minute. Here you can, those who can risk, always they enter with a risk here. You know, there are some people who just take risk entries. This is a very, very risk entry, but also you can consider this. There is also very many confluences. There is this one. There was a trend line right here. Okay, you can wait for this trend line to be swept. As you can see by the, it wasn't even a risk entry, because now when you draw that trend line there, you know there is a little liquidity on our trend lines, right? So after being swept, right, and they give us some bullish confirmations, someone will just enter right from there. Okay, after being swept, then you enter from there. Okay, because now this was a liquidity entry. Okay, can you see that after the trend line being swept, can you see how the market actually moved after liquidity being swept? So there are sometimes when they consider these liquidity confirmations. Okay, so now you can wait for now the break of market structure. Okay, so that is it. This is it now. This is the break that we're waiting for right here, because now that this was the high on our 1 hour time frame. So let's go back to our 1 hour time frame. Okay, because it is the time frame that we get the zones from, to trade from, because now the high that was resting there, and now the high was broken. Let's wait for retracement. Oh, that high is just right now, waiting, and the retracement has started, right? When the retracement starts, always, what do? We look for the zone. We draw our zones, right? We always draw our zones when the retracement starts, right? Remember, this is a high. Remember, this is a high right here. Remember, that is a high right there. Okay, that is a high. Okay, so now here, what do we have? What do we have right here? We have this extreme order block right here. We have this extreme order block. What is this? What is it doing? We have this extreme order block right there, and we have also another one right here. This is an order block after a rally. Okay, that is another order block right there, and also there is this one right here. There is this one right there. Okay, so now we got our lower time frame and we wait for the market to tap our zones before we take any entry trade, right? So we can also add another confluence right there, which is a trend line. Okay, we can also add another trend line confirmation and wait for the confirmation on our trend line also. So let's wait now. Let's spread the market. So you see, it is coming to our first zone right here. So when it has come to our first zone, is there any confirmation that it has given? Not yet. Not yet. So let's wait. Yes, it has started. Can you see this? When it reaches in second zone, can you see it? Okay, it has started giving us confirmations, right? Can you see it? This is what I wanted. It has given us a failed low, right? This is it. This was a low, and this was a low that has failed to break this, right? Now, can you see when you draw this trend line on your 5-minute, right? It shows that yes, we are now turning to bullish. Okay, so now here you can decide to risk. You can decide to risk some pips right here. Okay, you can decide to risk some pips right here, and you target this, right? You target there, almost 130 pips. Okay, it comes back. You see, is also another entry was there after the market coming back. Okay, after the market making this failed break, then another entry was here. It was there, as you can see. That was the second entry someone would use, right? And the target there is the same TP that you would use. Okay, let me see. Let us see here. The market just moved some pips and it has come back. Let's see whether it will either go to our third zone, or it will move from there. So as you can see, our stop loss has been hit. So that means you get another confirmation, right? Let's look for another confirmation, guys. Okay, here you can look for another confirmation after sell loss being hit. You can look for another confirmation right here. Okay, yes, we can have confirmation right here. Okay. Okay, can you see that? Can you see that, guys? Can you see that? Can you see how the market moved? So you know, always I have to look for when that's why it is better to risk what you can afford. Okay, so always the market will come back and get the confirmation, then you enter the market, right? So now, as you can see there, okay, it took some time to reach our TP, but the market was worthy it. That means that setup was worthy it. Okay, took some time, but of course it had to. Okay, it had to reach. The TP had to reach, so it took some time, guys. Okay, as you can see, our TP has hit. So now just these confirmations. Confirmation trade always are good because your risk is small. Okay, so now guys, for today we shall stop from there, and we'll meet tomorrow in our live at around 10 p.m. guys. So thank you for watching. Consider subscribing and give a like this video, share to friends so that they can also benefit. So bye bye.